Hey guys, usually everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some charts. We'll start with some fundamentally stuff, some supply related stuff, the crowd favorite stock to flow, which I don't put a lot of stock in myself, but there are plenty of people who are out there touting its virtues. I am simply the messenger. So if we look at where we're sitting in stock to flow, it projects 60 to 90,000 within the year. We'll see. I won't hold my breath. This is lookintobitcoin.com. Really cool site that you can look at all these metrics and manipulate the times, and you can zoom in and look at all the data points. Check that out. This is MVRV, market cap minus realized cap, which is basically coins that are actually moving on the chain, and divided by the standard deviation of market cap. So this just compares the paper value to actual utility. At least that's how I read this. Anytime we've dropped below 0, this is a Z-Score, so anytime we've dropped below 0 has been a buy zone. You can see we dropped to negative 0.16 on March 12th and bounced sufficiently from there. So despite not living in this sub-zero zone for an extended period of time, multiple months, as we've done in 2011, 2015, 2018, 2019, we still bounced pretty hard. So you can't be bearish on that simply because realized cap was actually dominating the market cap briefly. So you can see the highs in price, the all-time highs, pretty much correlate with these blowouts in the Z-Score. So to me, I read this as potential upside is phenomenal going forward over the next few months, if not 6 to 12 months. Puel multiples related to coin issuance. You can see this was the previous halving. So this multiple is going to drop pretty significantly back into the buy zone after halving. So you can see again, we were there in December 2018, 2015, 2012. All this stuff is sort of similar. MVRV, Puel. It's all going to show you similar stuff. So anytime Puel's been blown out, it's been an all-time high in price. So again, this to me says after having upside is vast, spacious, large, and this is something to watch, not necessarily right now because I'm already bullish, right? If you're in crypto and here's halving, fundamental event, 21 million supply, yada, yada, yada. The reason many of us are here, you're going to be bullish on that, but watching this going forward to see how bullish we get, how overbought we get, because if we do hit new all-time highs, it's very difficult psychologically, based on TA, based on a lot of things to really get a hold of what's going on in the market. So this is another way you can say, okay, let's look at this objectively. Let's look at the Puel multiple. Let's look at the MVRV Z-Score. Are these things blown out? What do they look like? What do the law of growth curves look like? Historically, we've bounced around these curves. Again, all-time high has been the top. Buy zones have been the low. Buy zone low. Median line, also a potential top. Again, we've broke below the buy zone. Like, this isn't perfect. Nothing's perfect. I'm not going to try to pretend that it is. Pretend that it's a perfect, beautiful pitchfork. But the median line is projecting 23,000. Okay, so like if we're at 23,000 by tomorrow, it might be time to chill out. If we're at whatever this is, what is this? If we're at 68,000 in May, clearly it's a bit much, right? Like, you don't necessarily need these metrics to tell you that, but it definitely helps when you're on this months-long, multi-year bull trend like we were in 2016, 2017, 2018, to really give you a handle on your bearings as far as where we're at in price. And then this is another good one, a little less useful than the other 3 or 4, but it'll tell you when it's oversold. It'll tell you when we're in a buy zone. Again, much like all the other metrics, 2012, 2015, 2018, 2019, it's all pointing to the same buy zones, which is what you want to see if any of these systems are worth a damn. They should all say the same stuff relatively. So upside for this is around 35,000. That's like beginnings of overbought territory. That's how I'd read this, if this was an oscillator, like RSI or something. So that's also something to take into account. Again, upside, vast, spacious, beautiful, prairie-like. Lots of room for upside here. All right, let's look at Bitcoin dominance. A lot of talk about alts and alt season shenanigans. I don't see that anywhere in the charts or the value of anything. Dominance had a nice either Adam Eve or just generic W here, and we broke above the 200. We're getting a 5200 bull cross on Bitcoin season dominance. So to me, this says alts are going to take a back seat in the near term, which is completely fine considering this is one of Bitcoin's fundamental events, right? Like I don't expect alts to outperform Bitcoin during and immediately after halving. It's not like there's anything exciting going on with LTC right now, right? Like all of the press and everything is on BTC right now, the spotlight. So once BTC breaks out, if it does, we'll see how immediate that effect is. But after it breaks out, there might be some consolidation and rotation into alts and that sort of thing. This to me is just showing that this is a 200 EMA, and anytime we're above the 200, BTC does better than alts. That's all. That's how I'd read that. Let's talk about Tether for a little bit. It's kind of broken all my hypotheses as far as supply demand. What's going on with Tether? They just keep printing. They're at 8 billion circulating or more at this point, almost surpassing the market cap of Tether, depending on how you calculate the circulating supply. Ripple, depending on how you calculate the circulating supply. What doesn't make sense to me is that we should be bullish if Tether drops below $1, which is what this line is up here. This is $1. Anytime it's below $1, it'll highlight it in yellow here. If we're below $1, we should be bullish. At least that's how it's acted since December 2019 to February 2020. This period, this zone here, it made sense logically. People were exiting Tether, buying crypto prices go up. We had this punctuated equilibrium with the drop here on March 12th as everybody jumped into Tether, safe haven. Okay, that makes sense. Tether prices are still hovering above $1 and have not really dropped below $1 for an extended period of time, since March 15th, let's say. Not something I'd expect if crypto's bullish. If crypto's bullish, I'd expect people to get out of Tether into crypto. So either there's something else going on in the background, which is completely possible with Tether as far as supply demand, non-crypto market related, or Tether just has fees that keep it above $1, which is the case and should be the case. It should really always be slightly above $1 just because of fees. So maybe it's perfectly priced and I'm just going nuts here. But if we go bearish all of a sudden and then Tether drops below $1, that really doesn't make sense. Even though that was the case throughout 2019, as soon as we dropped below $1 here, price came off. Price came off all throughout in here. This stuff previously was faith in Tether as a product, not necessarily like supply demand related. I guess it was supply demand related as well, but I think you get my point. It's a little different than it is now. So still watching that. I always talk about it. Not really much has happened, even though we've moved 150% from the bottom. Still printing Tether, which tells me there's obviously demand for it. Where's it going? Who's using it? And the amount of Tether on exchanges has actually declined over the past few months based on a few metrics I've seen from Sentiment and a few others. So it's kind of an enigma. There's something going on with Tether that isn't conspiracy or anything like that. It's just, it's not being used to buy crypto, really, from what I can tell. There's just demand somewhere else. Bitfinex has actually been behind Coinbase price-wise. So this is a comparison between the spot prices of Coinbase versus Bitfinex. Anytime Coinbase is leading Bitfinex, it's generally been bullish. I read that as cash leading Tether markets or cash leading anything else. And we see that on futures as well. There wasn't really any premium for any of this in the futures market. It was all just cash mainly buying. Something else I talk about often is this correlation to the VIX. This is BTC price. This is the VIX volatility index of traditional markets. This is 30-day rolling SPX correlation coefficient, 30-day rolling NASDAQ correlation coefficient. You can see we're still highly correlated with both NASDAQ and SPX. Not something you want to see if you are a diehard cyberpunk crypto person. You want to see BTC with a mind of its own, leading the world, being a global macro hedge against inflation, yada, yada, yada. So if traditional markets take another dive, which they don't seem to want to do despite unemployment being at record numbers. Crypto will dive with it just based on this correlation, which hasn't broken since the beginning of the year, really. So that's something to watch. I've been watching the VIX as well. Anytime VIX has spiked above 40, above 30, it's been a good time to buy crypto historically, and March 12th wasn't any different. VIX spiked to basically all-time high levels, definitely since 2008, and it's slowly been creeping down. So VIX wants to go to zero, and as VIX goes to zero, it should be bullish for crypto. Just historically, that's been the case. So to see that actually happen in real time has been a good thing if you're bullish. If you don't want us to go to zero, watching the VIX retrace is what you want to see. Looking at CME's futures contracts, there's been a lot of talk about open interest, which is at an all-time high, or notional volume, which is at multi-month, multi-year highs. And I guess not multi-year, but multi-month highs. I don't think it's a notional high compared to open, but it's got to be close at this point if open interest is at an all-time high. In general, there's no contract closing around halving. There's one contract expiration May 29th, but there's nothing in the immediate future. So I don't expect any massive volatility contract-wise. June 26th would be the contract to watch. That's the biannual. And May 29th, obviously, is the closer expiry. Those would be the two to watch just for rollover shenanigans with futures contracts. Here's the OKEX futures versus spot. This is back to my point about as bullish as we were, futures were actually negative. They were below spot this whole time, briefly above spot, and then right back negative again. So if this is a futures-led rally, which it has been over these past two bull rallies, really, they've been led by bullish exuberance on quarterly. You can see that this turquoise here. So even though we have 48 days, 45 days, something like that to expiry, another reason these premiums decay is just because we're near an expiry. So even with that, plenty of time to crank up this premium didn't happen. To me, that reads as though, again, there's beautiful spacious upside for premium to grow and grow and grow. If we get super bullish, if we were to break 10.6, which I don't think is going to happen in the near term, but if we do, this would be the first thing I'd look at. What is futures premium? Is it growing? Is it still at zero? Which doesn't really make any sense. I think post-halving we'll know a little more. There's probably a lot of hedging going on in and around halving from miners or all sorts of people who don't really completely have control over what's going on. So as halving hits, mining profitability is going to drop because issuance drops. So if you're a miner, seeing that as a threat to your business model, you're going to start hedging. And that may be why we're not seeing this futures premium explosion, as people are shorting futures, basically. ETH, it was even worse. This entire rising wedge, just negative, 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 negative. Now, ETH doesn't have a halving, obviously, but ETH and BTC are closely correlated price-wise historically. You can see how much different that is from the massive premium that was built up week over week, month over month. I guess not month over month, just week over week here. Late 2019, early 2020, when ETH sort of outperformed everything, and then how that decayed over time. I don't know, it's just really cool to watch that. Like, this is the futures curve that makes sense to me. This is the futures curve I don't quite understand because we're super bullish and negative on futures. I mean, we hit a negative 4% quarterly on ETH on that dump. So futures got really bearish. There were a ton of liquidations very quickly, and the book probably got blown out. So it got a little loose. But this is what you want to see if you're bullish, trend-wise, macro level. To see even the weekly spike up and decay. You'll see that week over week. And generally you see quarterly just continue to rise until, the end of the game, and then it just doesn't quite get as high. Another type of divergence you can look for is if price is increasing and futures premium is not. So you could probably argue that this entire ride up was just a bearish divergence based on futures premium. A few days ago, I was on a podcast with Ledger talking about 8.1 being a good target. The reason we were talking about 8.1 was because of the VPVR volume zone, the yearly pivot, the 200 EMA. This is a daily chart. Cloud itself, not much help. I'll zoom in on that in a second. But in general, it retraced to levels that obviously were violent, and it was like 10-15%, but not really that unexpected. We didn't even have a bear div here, which was a little surprising. Maybe you could argue a volume bear div, but certainly not on RSI. I mean, we were just pumping. Momentum was on our side, at least on the bull side, definitely. Something else we were watching is just this macro triangle that people love to draw that I'm not really a fan of, but it definitely hit one of the resistances there. It was threatening a touch of the upper Bollinger Band. It kind of retraced to the median line of the Bollinger Band. So these are all just levels that I'm always watching, just the 20 SMA, upper Bollinger Band, bottom Bollinger Band, yearly pivots, daily 200. Those are always support resistance no matter where they are on the chart, because you just never know. You never know. If it's a 15% drop in an hour, hey, welcome to crypto. It's a Thursday, it's a Saturday, whatever. Doesn't matter. Here's the 5200. It did cross. Well, it didn't actually cross bullish yet. Should cross bullish over the next week, as long as we don't make lower lows. The averages will pull up a little bit. Now you can see over the past year, hasn't really meant anything. You know, it's easier to trade these EMAs when you get 2 crosses in 18 months. Much harder to trade them when you get 6 crosses in 12 months, right? 1, 2, 3, 4, 5. This wasn't actually a cross, but you get the point. Harder to trade these when there's many more of them very quickly. So we'll see how convincing this bullish cross is. Going forward, it's definitely more bullish than bearish. It's just, where it sits just is kind of meaningless because there's just been too much noise. This is the daily cloud again, and you can see they hit the Tenkin, bounced. Okay, great. What I'm really looking for is an eventual Kijun bounce. So either the price will go sideways and the Kijun will catch up to price, or price will continue to meet the Kijun to the downside. The other level I'm watching, just like I was on the way up, is 7.2. 7.2 is a magnet on the way up because it's 50% of the range, and it's still a magnet for price because we didn't make a higher high, didn't make a lower low. That level is going to stay there for a little while, at least until the end of June, it looks like. So on a macro level, definitely watching 72 if we continue to break down, which I don't necessarily expect. Got some fills around 8.1, got some fills around 185 or something on ETH. So those are some leverage trades that I haven't taken in a long time, just waiting for this to cool off, to quiet down. What I will watch going forward is the 4-hour, because the 4-hour tends to project things much quicker than the daily. Obviously, it's a no-brainer, but it had you in, the cloud had you in down here. So you had a bullish Kuma breakout several times with a bullish TK cross, broke above that 7.2 magic line, and off it went. So now it's back into the cloud. It's reset everything from a momentum perspective. And what you want to see if you're bullish is sideways up. You don't want to see a break of 8.3, for example. I'll look at the ETH cloud in a second. That looks much worse than this. If you're bullish, if you're bearish on ETH, looks great. But this looks okay. It's threatening reversal. The cloud looks fine. Whatever. I'm not really worried about it. I'll start to get worried from the bullish perspective if we start breaking down, the cloud starts twisting red, the TK lines cross dramatically, that sort of thing. But any long entry signals or short entry signals going forward on this 4-hour should be good to go, probability wise. One thing a few of us were talking about is this macro inverted head and shoulders. I get a lot of crap. I get a lot of flack for pointing out inverted head and shoulders or head and shoulders that aren't the case or that don't follow specific tombstone written in concrete rules. Who cares? Okay, yes, I know the volume doesn't match. I know that this is going to be a hot mess if it does actually pan out, but I'm not going to rule out the projected targets, which are 15 to 18, if this does form completely. So I'd expect some sort of sideways mess below 10, below 10.6, with a nice breakout above 10, above 10.6, if that's occurs within the next few months even. This could take a long time. I mean, look at how long it took us, September to 2020, basically, to retest that. So I know it says multiple tests and, it doesn't look great, whatever. I'm not going to ride or die on this pattern. Something I'm watching in the back of my mind, though. Looking at ETH real quick, just a few charts. 5200 cross bullish, hit the 200. Again, just a no-brainer. Watch these levels. Watch the 200 as a support resist level forever and always. Looking at the daily cloud, you can see it didn't actually twist bullish, and the TK lines are also spread far apart, just like they are for BTC, which just says it's oversold conditions. Again, the Kijun is going to need to catch up with price. So price will either go sideways or it will meet the Kijun. If you're bullish, you want to see the Kijun meet price goes sideways, that sort of thing. I can easily foresee this twisting bullish over the next 2 months, this daily cloud. This ETH price might squirrel around at or around 188, where this 50% retrace is. But really what you're looking for is Kijun to finally mean revert, basically, with price and get on the bullish side. So you want to see the TK lines above the cloud next to price for any sort of continued slingshot up. And this is the 4-hour cloud I was talking about. You can see how the ETH price is below the 4-hour threatening a bearish cross. It'll cross bearish almost certainly in the next 1 or 2 candles here. So this picture looks like high probable short entry because everything is flipping freshly bearish. The TK cross is even bearish. So one way to play something like this is to go short and then add onto your short at around 195 or whatever this cloud level is. Because again, once price meets Kijun, it's usually go time, right? You can see that here. Oh, bullish, wait, we hit the Kijun, then we go. Like that's what you're waiting for in general on any of these trend following trades. And lastly, just ETH-BTC, the chart I've been watching forever. Not much has been going on really. From a trend perspective for ETH-BTC, it's just lost a bunch of ground as BTC is outperforming ETH. Over the next year, should ETH transition to 2.0 phase 0 sometime this year, and Bitcoin's halving is behind it, then there's potential for ETH to take the reins in the press and with all the meth head garbage that you see on Twitter and wherever else. And then you may see a price boost from there. But in the near term, I don't expect ETH to outperform BTC again because, this is a fundamental event for BTC that only happens every 4 years. Like, dislike, comment, share, subscribe, hit me up on Twitter, and happy trading.